Good day, and thank you for joining me for this walkthrough of our 10-year construction financial model for building and construction contractors. This model starts specifically with a user guide giving you exact details of the approach you need to take for completing any assumptions and what you can expect in terms of changes made to various input cells. So this user guide will provide you with details of the initial sheets, the main input sheets, and then the resultant outputs that you can expect. Before we start with the actual assumption input components, once the entire model has been completed, you'll be presented with a dashboard or executive summary, which will give you a breakdown of the 10-year components needed for the financial statements. So in this instance, starting with the profit and loss, the cash flow component, and then the high level indicators in terms of investor returns. You'll also be presented with a IRR and distribution schedule based on the assumptions, and then just some high level graphs for the 10-year period. So the model starts with the main project assumptions for this business. In this instance, just the starting year, whether when it comes to the valuation side of things, whether you want to include the terminal value or not as part of the company value, whether funding is required, and then if funding is required, what the debt amount would be, the balance being the equity side of the business. Company tax rate, any capital gains tax rates, if debt funding is taken in the business, what the parameters are in terms of lending rates and expectations for repayments, the cost of capital components to determine the WACC for the DCF can be amended here as well. You'll see throughout the model we've included some read notes to give you an examples of what each of these input cells would look at. And then there's just a sanity check at the bottom to show that there are no errors in the model once you've actually completed. So starting with the revenue assumptions, this model itself includes 3 different high-level building, contractor, or construction jobs. You'll see that each of them is split over the 10-year period on a month-to-month basis. So as an example, here you can change once you change the job name there, let's say it's new build 2026. It will automatically change there on the left hand side just for you to keep track. So the components that's important here is the number of new jobs started per month. Here you can input that. What the average percentage of job completed would be per month. So as an example, you'll start a job in month 1 and it might take 7 months to complete, of which the first month is only 5% completed or 10% completed. So those components you would actually include there. The average value that you can expect per job, or the contracted amount, the amount of cash that's actually collected on a month-to-month basis as you complete. The same on the material side or the cost element side, and then any equipment rental that is required for the construction or contractor job that you're taking on. Other direct costs, employees. So here you can name your various employees, the headcount per job that you can expect, the payroll taxes that's applicable, the average hourly rate, if there's overtime, the average overtime hours that they will work per annum, the wage rate, and the overtime rate. Everything is automatically calculated for you. And this is done then for job 2 and job 3 as well. Linked to that, you'll see the 3 job types, new build 2026 that we use as an example. For each of them, you can then define the various cost elements, direct cost elements in terms of material, as well as equipment rental. and whatever you include here will automatically drive through to the rest of the financial statements. Other non-direct cost elements in terms of your OPEX, so any fixed monthly costs like sales, marketing, general administrative costs, R&D as an example, any payment charges, etc. can be included here on an annual basis. Your CAPEX assumptions, capital raise assumptions, so total number of shares that you might have in the company, split between common shares or preferred shares, and then any outside investors can be classified here or named here, as well as the funds that they would contribute, and the percentage of stock that they would receive or equity, and then shareholders loans, founders contributions, any employee equity can be defined here as well, and this will then link back directly to the valuation as well as the balance sheet component of the model. Your CAPEX assumptions are included here, so any CAPEX required for the business, cost-wise, the useful life in years, when the actual CAPEX was purchased, this can be defined here. Your debt assumptions, so the loan term, if there's any loan taken on, in this instance, loan term is 15 years, 12 payments per year. The first payment starts in January 2025, but here you can define it, and everything works out. The amortization schedule works out automatically for you. And then if you do start a new building contractor business or construction business, any startup expenses can be defined here. The resultant outputs are your various financial statements split across monthly and annual information. So if you take a look at the monthly one for year one, there you'll see the revenue is automatically calculated there, the direct costs, your gross profit, your OPEX, depreciation that was defined earlier, and then your resultant net income. So to the 10-year period of this model is automatically calculated for you in the profit and loss. The same with the balance sheet, annual and monthly, your current assets, total assets, and all other aspects included, and then the sanity check or the balance check is done automatically for you as well. And then so to the cash flow from operating activities, investing activities, and financing activities, automatically calculated for you in both the monthly and annual cash flow statements. We have included additional sheets for information purposes only. Here, the initial assumptions that you made across the various job types, the revenue assumptions, as well as the direct cost assumptions, employee assumptions, etc., is automatically shown here for you. So if you really want to drill down into month-to-month scenarios to see what new jobs have been started, how many ongoing jobs do you currently have, what your current earned revenue is versus actual cash collected on that revenue, you can have a very clear indication on this monthly detail control sheet. And so too, there is an annual detail control sheet as well that's been calculated for you automatically across all facets of the financial model. And then the high level valuation will automatically, as soon as you start, I mentioned in the first input sheet that you can choose whether you want to include the terminal value or not. As soon as you make that decision, your valuation will automatically calculate here for you.